all day today, I think from all the sessions, the topic of banking and the financial markets has been a recurring topic. So what we want to do in this panel is talk about just that. There might be varying degrees of understanding and frames of reference in the room. So what we want to do is take you through the landscape of the Spanish financial markets, specifically talking about the top 15 banks, give you a sense of the regulatory framework, both there and internationally, and then get into the actual Spanish banks and their ability to do business, serve Spain and serve the world. Does that make sense? Anything else you want to know about?
No.
That's enough. That's enough. Okay. So to get started, I'll just have each of the panelists very briefly introduce themselves. They're all very distinguished. You've got their bios, but in case you haven't had a chance to read it, we just want you to get a brief understanding of who they are. So if we could start at the farthest end, Alejandro.
Yes. Hi, Alejandro Snal, PwC partner based in Madrid. I'm the banking leader in Spain. I'm very glad to be here with you all.
I'm Juan Inciarte, Executive Board Member of Santander, headquartered in Madrid, and I'm responsible for the global strategy of the group.
I'm José Manuel González Páramo. I'm Executive Board Member of BBVA, in charge of regulation, economics and public affairs, and a former central banker.
And he's also a professor. He's also a professor. So what I want to start off with is just getting into the main features of the Spanish banking sector and how that compares and contrasts with the United States. So Alejandro, if you could start us off with that.
Yeah. Well, the landscape has dramatically changed since what it was at the beginning of the crisis 6 years ago and even a year ago. And by the way, I might say some good things about Spanish banks. I just wanted to let you know up front in case someone thinks his heart is not going to resist. So as it was mentioned before, there's been a big consolidation in the market in the last 5 years. Right now we have 16 entities representing more than 90% of the market, as opposed to more than 40 entities a few years ago. So that's 2/3 of the players are out. Okay, so big consolidation. In a meeting like this, until very recently, you had to start by explaining what a caja was. And of course, cajas were not unique to Spain. Cajas exist in other countries, but it was very unique to Spain that cajas represented 50% of the market. So right now, it's no longer necessary to explain what a caja is, because most cajas have been either taken over by banks or transformed themselves into regular banks. So big consolidation, first point, and of course that's translated into a reduction on capacity that also it was touched before. I mean, you look at the number of branches, headcount, credit portfolio, all those indicators have decreased between 22 and 28% in the last 5 years, 6 years, and this is something that I think it was necessary. So now, is it over? I think there is still room for further consolidation or maybe further reduction in capacity in Spain, but I would say a very significant part of the job has been already done. As for differences with the US, for instance, you were mentioning, I would say there is a banking model difference, which is Spain is a very good example of what we call a universal bank model, which means as opposed to other countries in which you have typically banks specialized by products, and you have banks dealing with asset management, private banking, whatever. Spain is more a universal banking. You have the same players pretty much providing the whole range of products. And you see that Santander or BBVA really are the leaders in each one of those segments in Spain. And what is related to this is the way that clients operate with banks, the way clients bank, which is more according to that model, universal banking. So clients do not usually shop around and try to find new products, although we are starting to see that trend in Spain. And this is also related to the distribution channel, the distribution model that we have had until now in Spain, which was very based in the branches capillarity and the proximity and the role of the brand manager.
Juan, what's your view on what Alejandro just mentioned in terms of the universal model and clients now starting to shop around where that wasn't the case before?
Yeah, I think banks in Spain are basically totally different to banks in the US, totally different. And obviously, when people go to Spain, they feel that we in Spain, we are overbanked. And I always say this is not true, because when we come to the US, in the US, you need to shop in 3 different places. People they need to go to an insurance company for the insurance. They need to go to a broker to buy and sell securities. They need to go to an asset manager, and then they need to go to a bank in order to operate. So here, I mean, we are like the combination of Fidelity in Spain, plus Wells Fargo, plus MetLife, plus Merrill Lynch, if you wish. So at the end of the day, when we see a Spanish banking system and why that has happened, I mean, the history of the Spanish banking system is very new, in the sense that the Spanish economy really began to open for banks, foreign banks, that was in this late part of the 70s. So banks were really the only credible financial institutions in Spain, so they were really selling any kind of product. So when you go to a branch in Spain, you will see that a branch manager, and I will tell you this as a joke, and since you told me before that we need to make this more lively, I mean, a branch manager in New York or in any place in the US is really not the leader of the town, but a branch manager of a bank in Spain is the leader of the town. So at the end of the day, I remember that a person say, if your daughter marries with a branch manager in the US, you will not be very happy, but in Spain you will be very happy if your daughter marries a branch manager. So because the level of branch managers in the US is not really the level of a branch manager in Spain. So in terms of education, in terms of knowledge of products, in terms of ability to sell different products. So it's totally different concept of bank. So I would say that in that respect, I mean, I had been member of the board of several banks in the US, First Union a number of years, First Fidelity, we have a bank here in the US, a huge bank in the US, the biggest bank in New England, and obviously, and I could compare easily the difference of banks in Spain to the banks in the US. So they're totally different, and we have some things that are better in the Spanish bank than the US, and there are some things that the US banks are better than in Spain. Totally different, I would say.
Professor, what's your perspective? And when Juan talked about there are some things that are better in Spanish banks versus US banks, what do you think some of those things that are better are?
I would very much agree with what Juan has just said on the differences between the two banking approaches. I would say the essence of the approach that you find in Spain is the client as a focus of the banks, taken as a whole. The whole needs of the client are taken care of. Whereas what you see here is more a product-oriented system where you shop around in order to find the best combination of products. But this comes at the expense of a lot of time and searching costs on the side of consumers. So, and this is one of the challenges that we face when we try to establish ourselves and strengthen our business in the US, which is convincing the clients that the client-centered approach makes sense. And I think there is some progress being made, as Juan would agree. But for the rest, of course, differences are also to be assessed in terms of the regulatory environment, also in terms of the different ways that the authorities confronted the shock of 2008. But for the rest, the approach, the essence of the difference was mentioned by Juan.
You just talked about the regulatory environment. So let's get into that in terms of sharing. What is the spirit or the essence of Spanish banking regulation?
Well, in a way, it's the same as you see elsewhere, because we are subject to Basel III implications and the transposition of those rules to Spain through the European Union. So all these capital rules, liquidity rules, all the constraints on the way you have to introduce provisions or geographic expansion. I mean, many things are the same. What is different, perhaps, is the environment, the context, because Spain comes from a very deep real estate crisis that hit a part of the system, which was the cajas. And I think this clarification is very important, because there was no incident with commercial banks. The fourth thing had to do with the way savings banks operated, the way in which they expanded in the real estate arena. But of course, this has impacted the whole business because investors do not distinguish so finely between cajas and banks. What they know is that they established in Spain and that there is a link between the sovereign and the fate of the banks. So the environment makes a difference, and this is impacting, of course, developments in the fronts of solvency, liquidity, funding, geographic expansion, and the like. I have to say that maybe the paradox is that since Spain confronted huge problems a couple of years ago, a number of reforms have been front-loaded. So in a way, there is some advantage now to the Spanish financial system. For one, the banking system, or the caja system, to be more precise, was subject to this MOU, this program with the European Union that forced capital injections and nationalization of some institutions. And this triggered a number of reforms engineered by the government in the fronts of resolution, recapitalization, funding, which has made, in a way, easier for the banking system to confront the new asset quality reviews and stress testing on the side of the European authorities.
But you talk though about the asset quality, the stress testing, and the fact that now the ECB is taking over supervision for the top 15 Spanish banks. Practically, are they prepared? What does this mean for their preparedness, their ability to respond?
Yeah. Okay. Look, I mentioned before, and this first point I would make, that in 2012 and 13, as a result of this MOU that was requested by the Spanish government to the European Union with the intervention of the IMF, meant that the banks in Spain had to go through a stress testing exercise and an asset quality review of the same type that now the European Union is making, or the ECB is making, for the whole, or for the largest banks in Europe. So we are trained in that one, and the banks in Spain have been in the X-ray, so to speak, for some time. So this training is helping, and the main problems were spotted in that exercise. Second thing is that a huge amount of capital has been put on the table since 2009, and this is frequently forgotten. So you have, on the one hand, more than 120 billion of fresh new capital. Half of it came through the government, half of it via retained earnings or new issuance of shares, but 120 is 12% of GDP. The leveraging has proceeded. More than 400 billion of reduction in loans have taken place, and this, of course, has strengthened capital buffers. Markets have understood that things have made progress, and the best sign of it was presented to us this morning by Ángel Uribe. Access to liquidity is back. The cost of funding is falling very quickly. So for these two reasons, first, what was done in the past as a result of the front-loading forced by the crisis, and second, the training that we have done, and no other country has done in the same way, resulting from the MOU, put the Spanish institutions, in my view, in a rather good position confronting this AQR and this stress testing.
Juan, I know you have a view on this. If you could share your view, but also too, the professor just talked about the fact that liquidity is now more available and the cost of funding is going down. Your thoughts?
No, I think everyone claims that banks were not lending to SMEs in Spain. I mean, even the corporate sector. This morning we hear that problems were saying, okay, banks were not lending. Obviously, banks were lending. I mean, banks, I mean, you have here at this table two of the best European banks, not only Spanish banks. We compete with any European bank, and we compete with any bank in the US, both of us. And we compete not only in Europe, we compete in the US, and we compete in Latin America, and we normally win when we compete. So this is important. And the second thing is that banks, we make money when we lend. So like General Motors makes money when they sell cars, we make money when we lend. So we are in the business of lending. So, but one of the problems that people have not realized that the promise of the Spanish economy was that it was over leverage. And so, we have always this problem. If the economy is over leverage, and you ask me to lend more, I think the problem, and we have been discussing this morning, I think the problem of the Spanish economy is that we lack equity. We have too much debt and too little equity. Okay, I'm a banker, and I've been a banker of my life. And as you know, banks, we have very small margin, and we are here to lend money that is not our money. It's money that maybe is yours, or it's money of the grandmother of the commissioner that we saw that is deposited at our bank. So this is the money that we lend. And so banks, we have normally a small equity, and 95% of the money that we have is third-party money. So we lend money, but we expect people to pay us back the money, okay? So this is very simple, but people don't remember that. People think that we are really a private equity, or we are there
Charity.
to give money for entrepreneurs really to do investments. We are not there. This is a different animal. We are a bank, and we are a bank that works with third-party money. Remember that. This is critical. So Spain, the Spanish economy is doing now much better, and so when the economy is doing much better, now entrepreneurs, they see opportunities, and they come to a bank for money. And this is why lending is now start growing. First thing. Second thing, about rates. The problem that we in Spain have is the transmission of the monetary policy is not working properly. What it means? And this morning was presented fantastically. The rates in Spain are higher than the rates in Germany, which normally is the opposite. In transmission, I have a central banker on my right, so it's for me, I'm a private banker. I've never been a central banker like he has been. But normally, the European Central Bank would like to have in Spain rates lower because the economy is not doing very well. In the US, you will expect rates in California to be different than in New York. But California-based companies, they have very good rates, so they could do investments. So in Europe, in the Eurozone, with the same currency, the euro, which is stronger than the dollar, by the way, with the same currency, we have rates different in Spain than in Germany. This is the opposite, which like a macroeconomist, a central banker would say, okay, that makes no sense. And this is really not working properly. But I'm positive thinking myself because we are doing another thing which helps, which is the European Banking Union. And this is, people around this table don't understand maybe what is the European Banking Union, why Europe we are going so slowly. Because obviously, as people say, the European Union is a political union and goes very slowly, because every political union took, how many years took the US to have a political union? It took a lot of years, even in the US. So in Europe will take a lot of years. The European Banking Union will make that a bank based in Spain will be similar to a bank based in Germany or a bank based in France. Obviously, for that reason, the European Central Bank is doing the stress test, asset quality review. We will have a deposit guarantee fund, which in the US you had it, but not so long ago, the FDIC. So those things are really taking some time. And I'm hopeful that in the years to come, we will have rates in Spain to be lower. The Spanish government will borrow at lower rates. And when the Spanish government will borrow lower rates, then private will borrow lower rates. But the benchmark is set by the Spanish Treasury. If the Spanish Treasury is high, how a small corporate will borrow below the Treasury? Very difficult. You will understand that the US corporate will borrow below the US Treasury? No. So we have those things that make investments for a Spanish corporate a little bit more complicated, but I'm optimistic that those things may disappear. But banks in Spain, like BBVA or like Santander, we have plenty of liquidity, we are open for business, and we would love to lend more to real companies that they promise to pay us back because at the end of the we are not lending our money, we are lending third-party money. And we, Santander, like BBVA, we have never used any single money from any government. And we have survived the crisis, being the biggest bank in Europe, being the biggest bank in Latin America, and the 11th bank worldwide. So with no help from any government in any market that we operate. Remember that.
And on the back of global expansion, banks like Santander, BBVA, global, especially large, growing their presence in the United States, how do you balance, and Professor, if we can start with you, how do you balance the regulatory requirements in Europe versus the very stringent regulatory requirements here in the United States in terms of balancing it and being able to compete?
I mean, there are different opinions on which kind of standards are harsher. So I would not take it as given that the US is harsher on the banks than Europe. For one resolution, I think is harsher in Europe than in the US. If you have followed the way Europeans have agreed on how a bank, when it comes to the point of gone concern, would be resolved. But putting this element aside, what is critical, I think, is the waning will that one perceives of coordinating regulatory measures. There was a high momentum, or strong momentum towards convergence and harmonization of rules on the back of G20 agreements and the FSB guidelines. And over time, it appears that national pressures have taken over to the extent that there are indications that there is some kind of ring fencing, some desire to have a hand on the business no matter what. And this, of course, is understandable from the point of view of political economy, but creates some risks to the global banking as such, which has made possible development in countries that had no access to funds and to competition at the global level. When you ring fence, you diminish competitive forces because you protect the national interest. And what one senses is that the will to adopt consistent rules, for instance, towards capital or towards the way you deal with branches, which in fact you would wish them to become subsidiaries, which is a different business. And the best of the worlds, of course, is having subsidiaries or having subsidiaries with the guarantee of the parent bank. Of course, this is the best of the worlds possible. And many regulators are taking measures in that direction. So I think this is a call for a renewed impetus for consistency. I think the FSB will issue guidelines at the end of this year on how to deal with globally systemic banks like BBVA or Santander in order for them to put some of their liabilities aside as loss-absorbing capacity. Let's hope that they take into account the diversity of banking models, because the type of model that is being followed by Santander and BBVA, which is a subsidiary model with local funding, with local supervisors on top, with close dedication to the local economy under local supervision and other rules, might be put at risk if you are not sufficiently understanding of the resiliency of this model. So this is just a call for a renewed impetus for convergence in regulation. For example, you see that in these TTIP negotiations, the financial services have been put aside. I would understand why, but I don't agree on that, because this is key in order to, in the way forward, to put all the things on the table and to create a really competitive environment. If you put aside this trying to avoid political problems in Washington, that's a different story. But the principle should be financial services should be under the scope of the TTIP.
So I will not talk on the regulatory front because I fully agree with my colleague on the regulatory front. I mean, what is important in business is to have a level playing field. I mean, in other products, in Europe we have a level playing field, and we are trying to have a level playing field on many products, because we would like some product in the US to be sold in Spain. Banks, we deal with some very simple product, which is money. And I normally try to convince my customer that my euro is better than BBVA's euro, but it's very difficult to convince because the euro is the euro. I mean, a car, you could convince a customer that a Mercedes is better than BMW, but okay, but it's much more difficult in banking to convince that my euro is better than BBVA's euro. At the end of the day, everything is on price. So on our industry, which is important, is to have a level playing field. Regulation should be the same. Because if you don't have the same regulatory environment throughout the places that you operate, that makes banking much more complicated. So first, we need to have a level playing field in Europe. Extremely important among European countries. Because there is free movement of money, there is free movement of people, free movement of goods, but level playing field is totally different. So this, and then we need to apply the level playing field between US banks and European banks. Totally different. I mean, why is that? People will say US banks have less leverage than European banks. This is not true, because US banks, they have Fannie Mae and Freddie Mac, and they get all the mortgages off their balance sheets. And people don't understand that the banking system is totally different, the US banking system, the European banking system. So I think it's critically important, level playing field, to be the same. And you ask another question, there is international expansion. So I think in 1950, a Nobel Prize was awarded to a person called Markovich, which was a very simple rule, don't put all the eggs on the same basket. Okay, diversification theory. Okay, you remember, I mean, many people remember that Nobel Prize. So in banks, we do exactly the same. We don't put all the eggs in the same basket. So we have diversified our funding sources, we have diversified our asset sources extremely in many countries. As a matter of fact, 5 in Europe and 5 in the Americas. This is what we do. As a matter of fact, for instance, in Spain, you were saying that banks in Spain were taking money from investors overseas to fund. In our case, we at Santander, we have a loan-to-deposit ratio of 85. So we have more deposits from customers than loans. So at the end of the day, we would love to lend more money. So we don't need any money from US or any money from Japan or any money from Germany to lend. We have plenty of money from our depositors to lend. The problem is to find good investments that people could return. And so we had been through a big bubble in Spain in the asset class, which is real estate, that you know perfectly well, that in the US you had even bigger. So you have learned the experience the hard way in the US. So we have done exactly the same. And now we are digesting the bubble. And I think the economy is moving ahead. And so I think that we will not need to diversify more internationally because Spain will come back. And we will see that profits of banks in Spain will be extremely high. As a matter of fact, we think that we have announced that the profits of Santander in the banks will be almost 3 billion euros in a couple of years. And so we will come back to normalize profitability of a bank. And so we will come back and have normalized earnings. So for that reason, investors come to Spain. They don't come to Spain. We have seen the two brokers talking, Arcano and JB, talking why a lot of people come to Spain. They come to Spain because investors, they want to make money. As simple as that. So they think it's a good investment opportunity to invest in Spain.
But you know, though, you talk about not putting all your eggs in one basket, so the importance of global expansion, and you're saying that you're not going to continue to diversify anymore because Spain is going to come back. In the United States and globally, though, is there still resistance to the brand of Santander? How do you push through in terms of capturing mind share, wallet share?
Yeah.
And convincing clients, because Alejandro talked earlier about in Spain it's a product-centric selling model. In the United States and other parts of the world it's client-centric. How do you convince that client? Because you're fighting for your share of the pie.
I think it's critically important, branding. And I should admit that we, Santander, our brand is not very well known in the US. We have changed our brand from Sovereign to Santander 3 months ago. Now people I mean, it's like when we were to the UK, we changed UK brand a number of years ago. Now if you go to Boston, people in Boston will see that in every corner will see Santander signs. Like if you go to London, you will see it. If you go to Germany, you will see it. If you go to Poland, you will see it. I mean, if you go a lot of places, you will see. One of the problems is that branding in the US is very expensive to invest in branding, and branding recognition is critically important to do marketing in this country. We need to continue to invest in branding, and we hope that very soon people will know Santander brand a little bit more. I mean, in Europe, everyone knows our brand. In Latin America, everyone knows our brand. Remember, in this country, you have 55 people that speak Spanish. Most of them, they come from south of Rio Grande. And most of people that come from south of Rio Grande, they know Santander brand maybe better than Bank of America, Wells Fargo, or JP Morgan Chase. So they know that our brand is really a strong brand. But obviously, we had been in existence for 157 years, and we will like to continue to invest in the US. We make in the US $1.5 billion of profits, and we have more than 12,000 people working in the US. And we hope that our brand will be more strong in the US. So really, this is a weakness, and I should admit that we need to invest more in branding in the US, because people, if you go to the middle of the street and you ask, who is Santander, to begin, they have no idea how to pronounce our name. Santander. So they get it like in the middle. They have no idea to pronounce our name. We need to do more investment, I admit.
Professor, what if you can also take us through BBVA's global expansion strategy? How has it been different than that of Santander?
Let me, if I step back a little bit, and I'll do that quickly. On occasions you find very good models that have been configured, at least to some extent, by chance or outside the decision of those taking the very important decision, so to speak, to expand. You see, in the early 90s, following a very deep banking crisis and consolidation of the system in Spain, fewer opportunities were seen there. So there was the temptation, together with the liberalization and privatization, in particular in Latin America, for Spanish banks to become global, jumping overseas. But the supervisor was so cautious at that point, and I think rightly so, that the condition under which this was done was, okay, you do that if you become a subsidiary, so that not a single penny of capital in the mother company is at risk. This was the condition. And this is why Santander and BBVA shared the same model. They were granted permission to expand only under this condition. Paradoxically or not, this has made these banks more resilient than other models, because problems in the mother company did not impact the subsidiaries abroad, and you could see that from the spreads in the markets and so. So Bancomer, which is BBVA in Mexico, did not suffer from the problems in Spain, nor the other way around. When there were problems and are problems at the moment, again, unfortunately in Argentina, those problems are not impacting in the mother company. So as to what are the problems standing in the way to become more prominent in the US, if this is the second part of your question, I think is a problem of enduring and persevering in the business. In a way, we are new, or rather new, to this business. It's a different strategy, perhaps in the case of the BBVA. BBVA is the first bank in Mexico, so the same argument is the Sun Belt is the ideal geography in which to expand, and this is why BBVA's compass is especially strong in Texas. But all the states in the southern belt are populated by BBVA. And going forward, the vocation of the bank is to expand strongly, to continue, of course, acquisitions, to continue reinforcing buffers, and I think the prospects are, for that one, ideal. But one has to be patient and do business, like in banking, to acquire the reputation that you are a reliable bank in equal footing to traditional American banks.
I've got one more final question for our panelists before we're going to open it up for questions. While you're thinking about your questions, I'm going to ask one quick question to the panelists, which is, I know we talked about it earlier, but at the end of the day, it really does boil down to credit and companies' ability to get credit. So on the ground, practically, what's that? And I know you talked about, Spanish sovereign rates are high, leverage, regulatory. On the ground, practically, what's the number one barrier when it comes to access to credit? And how do corporates, clients navigate that with you?
If I may very quickly, the only barrier is the quality of the counterpart, which is improving dramatically, and I have to say that. New credit is growing since the end of last year. December 2012, new loans to SMEs have increased on the ballpark of 10%, and they continue to increase. This means that credit quality is improving, and lending standards are relaxing according to the ECB survey. Of course, since the stock of credit is still too high because the economy is over-leveraged, you will see over at least 2 years, I would say, an apparent contradiction, which is the stock of credit is going down, but new loans are going up. But new loans are not yet of sufficient volume to compensate the repayments and the write-offs. But new lending is taking place at the moment and a quite healthy speed. But of course, banks cannot give away the money because, as Juan said, we are guarantors of third parties' money.
Juan?
Yeah, I would say I will add only a small thing in lending. I mean, obviously, lending is growing. Is growing, and we will wish that will grow faster, because the level of lending will grow with the level of the economy. I don't know what is first, the chicken or the egg. I don't know. I mean, entrepreneurs, they feel that they cannot grow more because there is no lending available, and I think lending is available. But the critical problem, and you explained it before, was that 50% of the financial system in Spain were cajas, and has been massive restructuring of the cajas that you explained before. And obviously, when you go to SMEs, the knowledge of the SME is critical to lend to an SME. If you have 50% of the sector has disappeared, those companies that they were basically borrowing from those cajas, they have problems, because obviously we were not lending to that SMEs, so we need to know the SMEs. And one of the critical factors to lend is to have knowledge. And so 50% of the sector where cajas have problems. So I think with this consolidation that is taking place now, and which may become even bigger after the asset quality review and the stress test, I would think that lending will start to grow even faster than we have seen. And obviously, it's a correlation with GDP and lending. And you will see always, the first is that the GDP will start growing, and then lending goes behind. I don't know, maybe you have a different opinion, but
No, I agree.
he has an independent opinion.
Well, gentlemen, we'll have to leave it there. Thank you so much.
So, okay, we are running out. Thank you.
Thank you.
Well, I'm going to be very brief, because I know that this is time schedule, Spanish time schedule, but not the US time schedule. I am Daniel Landaluce. I'm part of the executive committee of the Chamber, and I have the privilege to chair this organizing committee of the Spain Economic Forum. I just want to take a moment to thank our speakers and panelists for the insightful and impactful contributions. Also to thank the audience for being here with us, and to thank also to our sponsors and the members of the organizing committee of the Spain Economic Forum. The tone of this forum has been very different from the one that we heard last year, and I'm sure, and hopefully it will be even better tone that we will hear in the Spain Economic Forum in 2015. I hope to see you there, and with this I close the 2014 Spain Economic Forum. Thank you very much to all.